Good morning, traders. Today is Tuesday, June 21st. Welcome to this live intraday strategy webinar on SB Trade Desk. Good to be with you this morning. Permendra, Eileen, Graham, Horace, Medad, Mir. Got a good group here today. Big week, obviously, with the referendum on Thursday. That's really going to be the main event. You know, we do get today Humphrey Hawkins' testimony today and tomorrow. This is the semi-annual testimony before Congress. And certainly we'll see what Yellen has to lay out on the back of a pretty dovish stance that we got last week with the FOMC announcement. So remember, today is in front of the Senate Banking Committee, which tends to be a little bit more aggressive with Yellen. It's really not the prepared statements, but moreover, the question and answer period, the Q&A session afterwards, where members of Congress get to question the Fed chair. That's usually where we get a little bit more of the meat of the move if we are going to see this prompt some dollars strength or weakness. As it stands, we'll go over the dollar positioning right now, but keep in mind that starts at 10 o'clock again tomorrow before the House Financial Services Committee, again at 10 o'clock. We get a second round of testimony. And of course, the Brexit vote on Thursday night. Realistically, we probably won't get any type of meaningful results here in the United States till late Thursday night. By Friday morning, I think we should have a clear picture of what's going on that vote. Feel free to throw out any questions or specific pairs you would like to review. I really want to prompt you guys and kind of just give you a moment of pause on getting aggressive on any sterling crosses as we get closer to Thursday. Keep in mind we are seeing margin requirements hired over on FXCM, so if you're trading with them, do keep in mind those emails that are coming through with margin changes heading into the event. And obviously, guys, aside from margin, on these releases, the spreads can really blow out. So for near-term traders like us, that's disastrous, right? So we want to make sure that we're keeping our leverage lowered. If we are holding positions, that we have our stops well defined. Leave yourself some room. And of course, good luck. It's going to be an interesting week, and we'll walk you through it here on SB as we get through. So with that in mind, let's jump into the charts here. Quick relative performance before we get started for the U.S. dollar. Does see that the Aussie is the highest performer so far in the session, up 0.63%. Kiwi up 0.60. Kiwi's coming in some interesting resistance that I highlighted yesterday on the radar charts. So we'll take a look at that. Swissy and CAD and Sterling up 0.2 to 0.3%. Euro is pretty much unchanged. I am still looking for a move lower in the euro to get on a long position. I think that looks pretty good. We'll go over that. And Japanese yen with a decline of 0.49%. Here's what the dollar index looks like as it stands right now. So, if you recall from yesterday's report, here's what we were looking at. I just wanted to highlight this cluster of major key support that you're looking at. Aside from a basic 786 retracement, that's never going to really halt us too much. But you have a 100% extension, which was the exact low that we made so far today. And you have the median line coming off the highs there, which also converges on this region. Keep in mind a 1618 extension from that same high takes us down to 11721. So there is room here for a little bit more of a drawback, but broadly looking for some near-term support here. Possibly see a rebound, not really looking to play the long per se, but would rather use that rally to possibly get back on the short side for the dollar index. Near term, you are coming into some support. Interestingly enough, if we take a look at the Fed futures rates, or Fed fund futures rates rather, which we've been tracking, you saw a slight uptick in the February probability of a hike. This was at 48% earlier in the week. I don't want to track this on a percent basis, but again, you're seeing that those interest rate probabilities have been kicked out past 2016, past February of 2017. So really the weakness that we've been seeing in the dollar, I think, it would be warranted both from a technical standpoint, obviously, which is what we follow, but also from the fundamentals of what the market's pricing in moving forward from the Fed. And this is why specifically today's testimony will be of interest for us. Because if we do, let me take a step back. From my standpoint, I do think that Janet is going to come out a little bit less dovish. I think markets interpreted that as an extremely dovish release last week with the FOMC policy statement. And I think she's going to try to walk that back, paint a little bit more of a rosy picture for the economy. Now, the Q&A session, if they do press her pretty aggressively on why they didn't raise rates or why the outlook for growth has been lowered. Last time around, we saw the projections lower the growth outlook, obviously. And we do see a little bit more of those uncertainty comments, which she was so comfortable with last week. She used it like 15 times during the course of the Q&A session. But if we do see her walk back a little bit of that dovish tilt, expect that we could see a nice little rebound here on the dollar index. And certainly we'll be looking to see if that shifts interest rate probabilities at all at this point. Hey, Adam, great to see you in the room, sir. Always a pleasure, my man. So with this in mind, and again, we'll come back to this throughout the course of the week, look for some support here in the dollar. Again, I'm not looking for any dollar short exposure from this level. I would want to see a decent rebound. Initial resistance, let me take a step back. The first initial resistance is going to be at the figure, 11,800. Okay, that's basically where we opened the week. Moreover, what we would need to see is a move into the close of last week to fill that gap, and that would be 11,826. So just below that 830 level, which of course was the low day close for August. So more of a bounce type of reading here, not really looking for a rally all the way up into the median line, but certainly initial targets at 800 would sort of be the initial place you'd start to look for some resistance if we do bounce from here. Here's what it looks like on the 30-minute chart, by the way. Okay, so aside from the lows that we made being, that 100% extension that we were looking at here, 11,731, just lower, 11,726 is a 2618 just from last week's decline. You can see here again, basic channel, take that parallel off the lows, off the lows here. You can see we're basically broke right below, right back above. If we do pop above 11,751, expect to see some give back here on the dollar index. Also keep in mind that we have been marking some divergence all into these lows. So could be a little bit of an exhaustion trade here for the dollar index, looking for a pop higher to get us that short exposure. Any questions on the dollar? Okay, so remember that near-term major critical support, 11,721/43. No change to any of the levels from yesterday. So that's the dollar index. Next up on tap from last night was the Aussie. Here's what the Aussie looked like. A very interesting setup heading into the RBA. There was an opportunity to get on the long side. As a disclaimer, again, I didn't take it. Wasn't really paying attention for the RBA minutes last night, but you did get a decent move to the upside. The RBA minutes, by the way, a little bit more upbeat than I was expecting even. Okay, we saw the central bank, basically the major takeaway, and I'll bring this up, I'll just show you what the sort of Reuters terminal was highlighting. The major highlighted comment was June policy pause consistent with the CPI returning to target. Says inflation expectations to remain low for some time, but the domestic economy generally positive. So they're a little bit more upbeat. And if we look at the overnight index swaps for Australia, interestingly enough, those probabilities of a cut got pushed out a little bit. So now you're looking, the first material probability for a cut got pushed out till October. Okay, obviously we were looking at this a little bit higher. Either it was August and September. It's been going back and forth. But again, just an example of the monetary policy divergence that we're seeing across the globe. With again the Fed fighting to essentially, fighting criticism that should be hiking, whereas we have expectations that we could be getting further cuts, further easing from countries like Australia, from countries like Japan, from the Eurozone as a whole. So we'll continue to track this as well. But looking at the Aussie dollar, you did see a pop higher into that key zone right here, 74.89 to 75.03. That's basically where we capped out last night. Okay, here's what the rally looks like right now. We probed just above it ahead of the webinar here, but we're back below. So you could see some near-term pullback here in Aussie dollar, which sort of pan well with a near-term rebound in the dollar index. Remember, the dollar index that we were looking at is an equally weighted Aussie, sterling, yen, and euro. So certainly the bulk of the move that we're seeing in the sterling is a quarter of that, but also if we do get that bounce in the dollar index, would sort of bode well for a near-term pullback here in the Aussie. Looking to stay constructive above 74. No change on that front. We're going to keep our bullish invalidation still at 73.60. As we get deeper in time, possibly into the close of U.S. trade today, I'd like to bring up that bullish invalidation to 74. 73.60 does represent a decent position here. It's the October high day close. If you look at the daily chart, that 73.60 level also represents the close that we made on that reversal day rally that we made early in the month. That was the exact close of that session and the exact high day close for October. But continuing to maintain a constructive outlook here on the Aussie dollar while above those levels. So looking for a pullback to buy. Again, the U.S. event risk today, you could see that on the back of Yellen. So we'll be paying close attention here. But 74, key support. A topside break. First, you're going to look for a rally back into that median line, which we just missed. But mostly, you're looking for a rally into the key 618 retracement. That takes you up into 75.70. Okay? Just higher. You have the April low day close, and that's at 75.90. And just higher from that, you have structural resistance for the current operative slope. Okay, so a huge region here. Huge region as you get right basically into 76. Any questions on the Aussie? As far as the economic docket is concerned, you're pretty limited on event risk out of Australia. Tonight, you do get Westpac leading index, which sometimes could be a market mover, but for the remainder of the week, we're pretty quiet from the Aussie side of the economic docket. Horace, I see your question there on EuroCAD. We'll definitely take a look at that. Let me write that down. Also, Euro Yen. Jamie put out a nice piece yesterday on his swing update. We'll definitely take a look at that. It saw a really nice reaction off support. We talked about that in the webinar on Daily FX yesterday. The pullback also finding support exactly where you would want it to. So we'll look at Euro Yen in just a moment. But before we do, Euro Dollar, here's what it looked like last night. So not much of a play here, a little disappointing, but basically looking for a move lower. This is the daily chart from last night. Basically looking for a move lower here towards median line, the 100-day moving average, for an inevitable stretch towards 114.17, 114.42 is a basic major key resistance on the near term. We need to be mindful for on the euro. Here's what it looks like, or here's what it looked like yesterday on the 30-minute. Here's what it looks like now. First on the daily, you're seeing that pullback start to materialize here. And here's what the 30-minute looks like. Okay, so 112.85 is a 38.2. Just lower to fill the gap would necessitate, I think I noted it here. $12.73 would be necessitated to fill the gap from Sunday. The bullish invalidation level I would like to see is 112.25, 112.30, a basic 618 retracement of the advance. And this is a really nice pivot in price that we've been making for the last few weeks and last week's opening range low, essentially. So looks like a decent range. You got the median line, which converges right on that region, basically into U.S. trade today. And this will remain our bullish invalidation level. So we're looking for a dip to buy while above this region for that inevitable stretch towards 114.17. And again, that major sort of confluence of median lines comes in just ahead, 114.40, 114.43 or so. So the euro has been a little lackluster since the start of the week. Again, there's not really much on tap out of the Eurozone. The Brexit vote is really going to be the major. Let me take that back. Tomorrow, or on the 23rd, in 2 days' time, we do get some manufacturing and services PMI numbers. But the major event risk for the euro will also be the Brexit vote. Remember, we've talked about this before, and I don't want to beat a dead horse. But the implications for a Brexit certainly have large consequences for the Eurozone project, not only on the precedents that it sets for other Eurozone membering nations, which are also dealing with their own fiscal issues, but really for the Eurozone project as a whole. And it's really going to be interesting to see how this pans out. Now, if they do Brexit, as it stands right now, as a quick update, we're seeing that the betting sites, guys, the guys who are putting the money down to bet on the Brexit, are heavily skewed for the Remain. Okay, I think at this point, last time I checked, they're at 70% for Remain within the euro. The polls that you're seeing that tend to be a little bit more back and forth are just the general opinion polls, right? The everyday Joe on the street and what they think. Or what they will be voting. So it's going to be interesting to see how it pans out, but the euro definitely is at risk as we head into that release as well. Looking for the pullback to give us a little bit more meat on the downside here before we start to look for long exposure, again, to fill the gap, 112.72, 112.70s, would sort of be the initial region you'd start to look for some support. Any questions on the euro at this point? So again, feel free to take a snapshot of the chart here, guys, if you need this for your reference. None of the levels have changed. Same levels from yesterday. And just as we get these market conditions, guys, like we're heading into NFPs or when we head into non-farm payrolls where you start to see liquidity start to thin out, markets tend to go into a range-bound sort of monotonous type of trade pattern, you're likely to see that. The Brexit vote is putting a lot of strain on broader risk appetite. So if anything, a lot of the moves that we're seeing are position squaring as opposed to new positions. So keep that in mind. Okay, so my note says euro still looking for the pullback to get long. No change there. All right. Okay, so if there are no other questions on the euro, let's jump into last night's radar charts. Dollar CAD and Crude are the sort of the focus I was looking at to start off, with both of them basically, I don't want to say moving in lockstep, but coming into very interesting areas. So dollar CAD coming in some areas of support. I'd like to see a dip just lower towards 127.50 if we can get it. Crude also probing into resistance. I think you could get another spike into that major key resistance level as well. But first things first, here's what dollar CAD looks like on the daily chart. Okay. The only thing I wanted to highlight here is this basic median line, the formation that we've been following, okay, has been pretty fruitful. You're seeing yesterday we closed right at that, and right now today it's near-term resistance. So we could get a little bit of a move lower, and I do think that you start to look for some support near initially the low day close for the year. Comes in at 127.22. Low day close for the month is basically the low we just made. Here's what the 30-minute chart looks like for dollar CAD. Oh, I stand corrected. Low day close a little bit lower. But here's what the dollar CAD looks like above near-term support at 76 for retracement. 127.55, 127.48. Nice pivot in price, the low that we made last week. Looks like we got some divergence right into that level. So look for a rebound off this region. Again, same thing here. To fill the gap, you would need a rally towards the close from Sunday, which is 128.87. And again, that would be a nice region of resistance I'd be starting to look for in the dollar CAD. Let me zoom this out for you real quick to get a broader view. So I know there's a lot of lines going on here, guys, but just bear with me. You're looking at the broader rally here off the lows, okay? If you take a parallel of that to the high that you made there on the 17th, you can see it caught the highs that we made this month. Within the confines of that, we've been working with this slope, and this is the slope that you're looking at with the daily chart. Okay, now below both of the median line slopes that we were looking at, near-term slope support comes in right at 127.22, which is the 2016 low day close. The monthly low day close, which is what I was trying to say earlier, actually comes in just a little bit lower at 126.90, and that coincides on former upper median line parallel. So basically, long story short, guys, looking for a move back towards this region is the immediate focus on any type of rebound to sell. Now, again, focusing on what we're looking at with the dollar index, although the dollar CAD is not, the Canadian dollar is not represented in the dollar index. But broadly speaking, if we do see that dollar near-term rebound off support, look for initial resistance 128.18, and again to fill the gap at 128.80 level or so would be a nice area. I'd start to look for some possible re-entry on the short side for dollar CAD. Keep in mind tomorrow we do have retail sales for Canadian economy on tap, looking for a build of 0.8% from a previous decline of -1%. So certainly we'll be looking for those numbers tomorrow morning at 8:30. That's right ahead of Yellen's testimony at 10. Any questions on dollar CAD? Joe says, "Hi Mike, can you go through sterling dollar and sterling CAD?" Absolutely. I'm going to go through sterling dollar every day this week, guys. I want to make sure you're all very clear on where that stands. Sterling CAD, let me write that down. And Adam wants to look at Euro CAD as well. So it's a second vote for Euro CAD today. We'll take a look. Mir says, regarding the Brexit, do you trade the sterling before the vote? How would a decision to stay in the euro impact the sterling and the euro after the vote? Good question, Mir. And I want to preface this by telling you this is just my personal opinion trading. You know, these are precedents in that the market's never really seen these types of extraneous factors really shifting market sentiment, right, Mir? So if you put a gun to my head, which is the best way I can relay it, and tell me what's going to happen, okay, to the pound if the Brexit vote turns out to stay, I would think that you would see some sterling strength. The initial reaction still might be a quick whipsaw, but I would still be looking for broader sterling strength. Keep in mind a couple of things. I like to look at it from a trading standpoint. If I was taking myself back to the days where I was sitting on the trade desk and I was positioned with the bank's money, what would I be doing on such a release? Well, a great bonds trader once said, you trade up to the event. You don't trade the event, okay? And what that means is for the guys who are really trying to trade Brexit, they're already positioned. Okay, there's no I don't want to say serious. There's no big professional traders out there that are waiting to see if we get a vote to stay or leave to place a trade, right? That's just not the way it works. And typically that's not really a great way to trade event risk. So if they're short, then there's going to be a lot of short covering on such a decision, and that's likely to see some sterling strength. Again, just my personal opinion. You know what? Let's just jump into the pound instead of kind of conjecture here while we're just looking. The reason I would say we would get some whipsaw first is because we've had such a massive rally. And what this is telling me is that the market is pricing out a Brexit at this point. So you could get a jackknife effect down to the downside, clearing out some of the guys who have been long want to clear that position. New guys who missed the long want to be entering the position. So the pullback all of a sudden triggers some nice long entries again, and then you get another extension to the upside. That could be a way of this could pan out. Now, the best thing I can say to you, Mir, to answer your question with a little bit more conviction is this. I want you to ask me that question on Thursday morning. And the reason I say that is because what the market will do on the back of the Brexit vote will largely have to do with where the pound is trading at that point. Meaning, nothing supersedes the technicals. Remember, we talk about this all the time. And SB Trade, that's our focus. We try to keep that noise out and what price action's saying. So if the pair is at resistance and they decide to stay, you're likely to see a jackknife. And what I mean by jackknife is a really stern, sharp move to the downside and then a rally again. If it's at resistance and we get a vote to leave, I think that's a no-brainer, right? On the other side of that, if they do leave, period, I do think that you probably see the sterling come off really, really strong, but then we're still constructive, right? I still think that even if they do leave, you would look for a drop maybe towards, I don't know, it would be guessing at this point, guys, but the first initial thing would be just to fill the Sunday gap. Structural support for the broader formation that we broke out of earlier this year would take you as low as 141, 142, 141.93, 142. But it really is going to be determined on where the pound is trading at the time of the release as we head into it. So, Mir, we'll go over this again on Thursday morning. So we do have a webinar there, luckily. For the euro, the impact of a leave would be more dramatic. And we talked about that earlier in the session today, right? The precedence that sets for all these periphery nations which are still struggling, Spain, Greece, even Italy to a degree, right? Although they've made some serious reforms. So it's really the implications on what precedence this sets as a whole for the euro project. But as it stands right now, we've been constructive the sterling. And for me, price action is saying that markets are starting to price out that probability. At this point, the risk or the more volatile decision would actually be if they do decide to leave, because markets are starting to lean more towards a stay vote. Mir, does that make sense? Does that offer any clarity? Remember, we're talking about a very tricky event risk here. This is not something that's your old run-of-the-mill interest rate decision or unemployment rate. This is sort of the meat of it all. Horace says yes, thanks. Mir says yes, thanks as well. Appreciate that, guys. So again, we'll come back to this. All you need to know right now on the pound before we jump back into oil is we're testing the yearly open 47.30. We've talked about that before. We've talked about the last four times that we've attempted to break through this. Each time has seen a lesser and lesser probe. So, for example, here on the 3rd of May, you got as high as 47.68. We tried again here on the 26th. We got as high as 47.38. We tried here again on the 31st on outside day reversal. We got as high as only 47.24. So each time we tried to go into the yearly open, we probed it by less. This is the biggest run through we've gotten so far this year. The high is 47.80. Okay, so I would be looking for near-term resistance for the pound heading into the U.S. session today. I wouldn't put it outside the realm of possibility to see a test of this basic trend line off the July highs from 2014. Okay, that's just higher. It's basically right around the 48 handle. Wouldn't be surprised to see a rally into that before seeing some weakness. Momentum also has some room here before we head into 60. So sort of the game plan here is to look for some resistance into the U.S. trade session as you head into that 148 handle. Okay, a pullback would offer opportunity for us to try to attack alongside if we get that opportunity before the Brexit vote. But near term, I'd be looking for some exhaustion here on the upside for the pound. Here's what the 30-minute looks like, and it's all over the place, but the levels are still pretty clean. I mean, this is still the same setup from last week, guys. No change. There's the yearly open at 47.30. 48.12. That is labeled wrong. Oh, that's a 2013 low, excuse me. This is a 2013 low, comes in at 48.12. So right above that 48 handle. I also just want to note this slope is an adjusted slope from last week, okay, using the highs that we made for May and the low that we made for June thus far. And if you take a parallel of that slope right off that high, you can see resistance, support, resistance, resistance, resistance. And bear with me one moment. I just want to see, now that we're marking, we marked some pretty strong divergence into the highs, right? And if we do break back below 46.70, that would be a near-term pullback. And a retracement would look something like this. Okay, all the levels are pretty well highlighted already. So 45.88, you got the 236 just ahead of that at 45.99. And then we got a level here at 44.80. You got 44.86 would be a 38.2. Initial areas of support, you'd start to look for sterling if we do break below this near-term barrier. Remember, the 200-day moving average sneaks right in there. Okay, any questions on the British pound before we move off? You're basically trading towards the high end of the range, guys. So look for a pullback from here. If we do breach 48.12, that 48 handle, 48.83 would be a 50% retracement of the entire decline off the highs that you made. What month was that? May of last year. Oh, sorry, excuse me, June. 50% retrace takes into 48.80. But watch that 48 handle, 48.12 first as near-term resistance. If we do push higher, I really think this thing gives us a little bit of a pullback. Remember, the dollar index also looks like it's coming off support. So all the pieces of the puzzle sort of fitting pretty nicely here. But before I leave this, for Mir and Adam and Horace and some of the guys who are looking at the Sterling crosses, keep in mind, again, this is going to be a very volatile pair to trade heading into Thursday. Every time we get a new pull out, this thing is going to show a reaction. So if you're near-term scalping it, make sure we stay a little bit lighter on the leverage. Okay. I'm going to take a jump really quick back to finish some of the radar charts, and then I'm going to jump in some of the Sterling crosses and CAD crosses you guys want to look at really quick. Here's what crude oil looked like. So we talked about CAD. We're showing some divergence here, which could give us a rebound, but broadly, you're still looking for a possible drop into structural support. With that, looking at crude, yesterday it looked like it was making its way through this 618. We've kind of pulled back a little bit below that at this point. But here's what crude looks like on the daily chart. All right, and here's what we looked like last night. So the 618 retracement at 49.41. If you guys remember in the webinar yesterday, that's the sort of initial area of resistance we were looking for. At this point, with what we're seeing, I wouldn't be surprised to see this thing probe back up into 50, 90, 51. And the reason I say that is because of the strong rebound that we got off of this initial key support structure. Remember, again, you're looking at the open from last month at 45.98. You're looking at a basic 236 of the entire ascent. That's at 45.48. And we came right into that and posted an outside day reversal candle, taking us back above 50 in momentum. So for me, that suggests that you could see a little bit more upside to go before this thing turns over. Long story short, the broader sort of key level is still going to be that 51 handle. Today's close is going to be important. If we close below this, I do expect some near-term weakness, but that near-term weakness should finally avail to a last stab at a high there in crude. Another thing I do want to highlight is the crossover that you're seeing here. Typically, a very strong crossover signal is going to be that 100-day moving crossover over the 200-day. And while this is typically a very bullish interpretation of moving averages, which we don't stress here, but nonetheless, it's longer term. Okay, so you can get these RSI crosses, get a move lower of 10%, 5% move lower before it starts to rally again. This has no tell on time, but rather on the broader shift in price movement. So, I'd be weary if we clear 51. Let's just say that on any type of short exposure. On oil daily and other pairs in general, how far back to look for RSI divergence? Oh, so Eileen, for RSI divergence, you want to look at the latest, the most recent two peaks, or the recent two troughs. You don't want to go back months and months unless those two highs, concerted highs, are months apart. So don't stress time, but once again, stress price action. Does that make sense, Eileen? Is there something that I showed you today that you have a question on? Let me ask you that, where the divergence didn't pop out. Two peaks on any time frame? Yeah, but you don't want to be like back-to-back, like candle peaks. You want to look for real peaks. So here, let me show you some examples. So for the best example I know of is the British pound that we got earlier this year. Okay, this is month apart, right? But I would say, and I think you would agree, Eileen, this is a major low, or this is a trough, and this is a trough, right? And you can see the oscillator making a lower high and then a higher low as price made a lower low. That's a good example. That's on a daily chart, right? But we can also find this on intraday charts. So for something like this, you might have heard me say that there's divergence here, right? This is a series of higher highs and higher lows. Okay, you were right here, Eileen, on the sterling as you requested. Higher high, higher high, higher high, higher high, series of lower highs. Now, even these last 3 points, remember, as we always say in momentum, it's not necessary that this makes a lower high, but rather that a new extreme in price is not reflected in the oscillator. That's the most important thing. So we made a new high in price, but didn't make a new high in the oscillator. That's divergence. So the easiest way to identify it, to be able to be a little bit more comfortable with calling it, is to bring it into a line chart. So here's a peak, here's a peak, here's a peak, and look at the corresponding peaks in momentum. Does that make sense, Eileen? So also on the daily, is that divergence on RSI then? Let me go back to the daily. On the sterling as well? Oh, on oil. Okay. No, here I don't necessarily see some divergence, Eileen. You want to tell me where the divergence here? I'll tell you where you're going wrong. But this, if you look at the oscillator, had a series of higher highs as price action was making new extremes. Right? Higher high in price, higher high in momentum. Higher high in price, higher high in momentum. Higher high in price, higher high in momentum. So no divergence here on the daily chart. If you're looking at the lows, okay, yeah, I think you're reading too much into it, Eileen. That's something called reverse divergence, and that's not going to give you much. So if the oscillator makes a lower low or makes an equal low and the price action makes a higher low, that's not going to be something you want to pay attention to. It's always the extreme in price. So if price action had made a lower low and the oscillator a higher low, like we did in the pound, that's divergence along the lows. Price action, lower low. Extreme in price, no extreme in the oscillator. It's always the extreme in price you're looking for, not the extreme in the oscillator. Does that make sense? Yes, makes sense. All right, cool. Good question. Good question. I think a lot of people go wrong with that sometimes. Okay. Any other questions on oil before we move off? So if this does turn out to be, maybe I got a little bit anxious yesterday when I saw that probing through. I thought it was going to go through higher, but look for some near-term resistance here. Inevitably, the pullback should settle out ahead of this region, and we'll look for a stretch into a final high near 51 again, possibly, for crude. CAD, crude, euro. So that goes over all the radar charts from last night, except for the Kiwi. And this is another one where I'm looking for an exhaustion trade here. And the reason being, we're coming at some interesting resistance targets I just wanted to highlight last night. And initially, that major key resistance is 71.52 into 71.75. Big region of resistance, a key 618 retracement of the entire decline. That's at 71.52. And then you have the 2011 low day close at 71.75. You also have structural or channel resistance right into that region today. So you see we probed right into it, seeing some nice resistance hold there now. Again, Eileen, this would be a perfect example of a pair that could give us a nice strong divergent signal if the oscillator holds below that high and we end up closing around about this region. Okay, that would be a nice divergent signal into resistance. But broadly speaking, I am looking for an exhaustion trade here in the Kiwi. Keep in mind, it's second best performer on the session. And as far as Kiwi data is concerned, you really don't have much also. This week, you get trade balance figures on the 26th. That's next week. Or on Sunday night, rather. But you're pretty spent on Kiwi data. And we'll be looking for the dollar to really drive this pair. So, now that we've highlighted this major key resistance, The implications are if the dollar does in fact push through this, you've got a long way to go to the upside. There's really not much I'd be looking for in the way of resistance until 73.21, this region here. A decent pivot in price. Also looking at 74.12, 74.14. This is a nice 786 retracement. Overlap dead on with a 1618 extension off the low. So the levels are pretty clear. I don't like the scalp chart. I'll show it to you real quick. I don't really like it at this point. Again, this retracement's using this high, which caught that 38.2. At this point, we'd need to stretch it to the new high, but we don't have any confirmation that we have one yet. So for me, I'm kind of on the sidelines looking for momentum to give me a little bit more of an exhaustion trade. You don't necessarily have any divergence of magnitude to work with here, although I do think that this thing does hold sub 71.75. You get maybe another probe into that region on US trade today, but I'm broadly looking for this thing to cap out near term somewhere around this range. All right. So those are the radar charts from last night. Let me know if you have any questions on any of those. Let's jump into your setups at this point. Before we jump into Euro CAD, which a lot of people want to look at, I do want to look at Euro Yen. This is something that Jamie highlighted last night. I know we talked about it here or on the webinar yesterday on Daily FX. Remember this daily chart? We talked about the fact that we came into a beautiful, beautiful area of confluence support where this thing rebounded. Basically looking at lower median line parallel or lower channel support, whatever you want to call it, which converged dead on with the key 618 retracement of the advance off the lows that we made from July of last year. I'm sorry, this is July of 2012. Right there. Really strong rebound. Look where we're finding resistance. Lower median line parallel for that operative structure we were in for months and months and months. Okay. Now, on the near term, here's what it looks like on the 30-minute. Okay, so there's that same formation. Lower median line parallel as resistance. If we take a basic channel off the highs that we made in late May, parallel to the lows here, support, 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 break, resistance, gapped above, support, key resistance near term right here. For me, keep in mind, we've filled the gap from last night. I'm looking for long exposure as tight as I can get with a stop against this region here. Okay, momentum also looks pretty darn healthy with that break back above 60 from oversold conditions. And while we've just set the weekly opening range, I do love playing these weekly opening range after we've filled the gap. So the market will gap on the Sunday open. If it fills the gap, now that range is what matters. So for me, a break below the lows here would suggest, we have a little bit more downside to go in Euro Yen. A break above the top side here, which coincides very nicely with that confluence, would suggest, nice breakout here in Euro Yen. So while I'm not really crazy about playing the yen at this point, I think this is worth, keeping an eye on. Again, if you take a look at Jamie's swing update from yesterday, okay, there it was. He actually called it right there. And the rebound higher has already materialized. The pullback here now gives us a little bit more conviction now that we filled the gap to put a stop below that low. Ideally, I would actually like to have a stop below here, which is the 618, and give us a little bit of room. And in time, that would allow price to possibly go back and check, a test of former channel support again before moving off. That being said, I'm on the lookout for long triggers, guys. Weekly opening range looks pretty good. We'll be looking for that break to validate our bias. Any questions? On Euro Yen. Once we get that validation of the breakout, I'll be much more inclined to just tack on a quick retracement from one of these near-term highs to get the upside targets. But we need to close above this region to really invalidate that or constitute that as a near-term false break. Also, keep in mind we recovered back above 30 pretty quick. So another thing that we'll want to keep in mind here for Euro Yen. All right, let's jump into the other Euro pairs that you guys want to cover. Got a lot of questions on Euro CAD, so let's take a look there. Euro CAD looks like this. Oh, Mir says, I think what Eileen was referring to in oil is hidden divergence when the oscillator makes a lower low and price making a higher high. Oh, okay, that's something completely different. Just read about it in Google. If so, we have bullish divergence. Yeah, if you're talking about something called hidden divergence, which I don't really take into account as something let's just say I haven't used it in my trading as a strong indicator mirror personally. Just from over the years, I haven't seen that to be a very extremely fruitful way of using RSI. But that being said, yeah, there is something called hidden divergence, which a lot of people will use as justification for a trade, where exactly as you said, the oscillator makes a lower low and price action is making a higher high. For me, that's not the way I want to use RSI mirror, and that's just a personal opinion mirror. I like to use the oscillators when I'm looking at the price rallying. I want to see price points on the upside and peaks in the oscillator. When the price is declining or when we're downtrend, I want to look at the bottom points in price, and I want to look at the dips or lows in the oscillator. Trying to account for higher highs in price and lower lows in the oscillator or vice versa. While it can, it can work. I know of some guys who they do, webinars and classes on hidden divergence. That's cool. But for me, it's just not something I've used too much in my own personal trading mirror. So good point. Thanks for bringing that up. And Eileen, I don't know if that's what you're referring to, but that is something that does hold merit. Good for even more extra explanation on divergence. Eileen liked the question, Mir. So love the back and forth, guys. Right on. So let's jump into EuroCAD. Look, the daily chart hasn't been too inspiring for me, and that's because I absolutely abhor these expansionary ranges. I've never performed too well in them, and for me, kind of throws me off. So I'm not really stressing the daily chart at this point. The only thing I can tell you on its face value is that we've made a simple monthly opening range into support, and we're basically holding that range right now. The monthly open comes in at 45.70. We saw a fail of that region last week, on an attempted rally to the upside. But let's see what the 30-minute looks like, if we got any juice there. Oh, all right. Near term looks like a different story. So if you remember, this is the slope we were following last week. Basic trendline support or channel support, convergence with the 50% retracement just broke. Gives you a downside bias. Momentum is sub 40. Okay, so this ends up being something important here. So remember, I always tell you guys this every time I see it. The 100% extension off the high overlay with a 618 tends to be really important levels, both on an inflectionary basis or if it breaks, typically you get a really deep run through. So the fact that we're seeing this reversal candle here right off that after a probe below, it has me looking at this with interest. Let's clean this up a little bit. See if there's any structure to this decline here. Yeah, all right. So do this. This is going to be near-term key support. Go ahead and remove these retracements. former support, current resistance, puts your resistance barrier here. A long line with that low. Which is also in line with the initial opening range high from last week. Beautiful. Beautiful. So initial resistance looking towards 45, essentially 144.99 would be the low that we made from that stretch day late last week, and also the initial opening range high, which we broke and tested as support. Also coincides with the upper median line parallel and former trendline support. So, yeah, I'd expect to see some upside from here. Guys, for those of you who are looking at EuroCAD, really interesting confluence of support right down there and structural support for the current operative trend there, if that fork is right, which it looks pretty decent. Let's get the exact high here. Really nice pivot here. Support, 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 and again. Where's the weekly open come into play? Open 45, 49.5. 45, 49.5. Okay, so your immediate bearish invalidation level would be 45. Okay, so the immediate focus would be selling rallies while within this formation, and that basically is the 45 handle. The invalidation or the bearish invalidation, the thing that would shift the focus clearly back to the upside, would be a rally back towards or through the weekly open. A basic trendline resistance just off the highs. Doesn't converge on that for quite many days here, but actually, wow, look at that. Even more. Even more. Okay, so with that respect, guys, what this means is this. If we do see this thing open the US session here in just a couple of minutes and push below the low we just made in price here, then you're looking for broadly a move into this region, 43.20 to 43.30. Okay, a much bigger range trade to the downside, but that's where structural support would be. That's where Fibonacci support would be. And that's sort of the range you'd look for as support on a drop and break below this region. Again, immediate focus for me would be on a rebound higher from here. Look for some resistance near 45. A break to the downside invalidates that rebound idea, and you'd look for a drop towards that 43.20, 43.19 handle. Adam, does that help? Horace, you're looking for EuroCAD. Does that help? Any specific questions on EuroCAD? Hey, Graham, I'm going to read your comments here. So, Graham says, hi, good morning, Michael. I worked out a trading strategy for living in the UK this week. I'm voting on Thursday, then flying out on holiday, so I don't risk my margin in volatility that follows. View from a Brit who has decided to watch it rather than trade it. If the vote is remain, sterling year open becomes resistance, becomes new support. If they vote Brexit, the FTSE 100 retail readers panic, and there will be some stock bargains there as people realize exit will take years to negotiate. It will take years to negotiate. That's 100% true. And not only that, guys, again, as I've stated over and over again, no one knows what the decoupling process will look like, right? That's the uncertainty of it. It's not something that's going to happen overnight. It's going to take, years of negotiation, like Graham has said. And to my understanding, this vote actually isn't legally binding, right? So, it's not an end-all process. Certainly, markets are going to treat it as such. And I think you're on a good idea there with taking vacation. I'm kind of jealous, but probably better off, Graham, not being around when all this goes down. I would ask you if you're voting to stay or leave, but I think that's too personal of a question, so I'll just leave it out there. Eileen says, oh, I got that comment. Mir says, are we bearish gold? Horace says, I just have to watch your pair. Adam says, thanks, Michael. You're more than welcome, Adam. Horace, yeah, this is a great pair to watch. I wasn't paying attention to it till you guys asked today. I know that the swing trades got taken out there on that dip into 44.40. For me, I still love the region as support. It's just now that we've identified this slope and with what momentum is doing here, doesn't look like the broader, doesn't give me too much confidence, Rad, let's say that, that there's a clear directional definitive bias here. As long as we stay within the monthly opening range, I treat it as such. I would treat it as such, all right? For gold, Mir, here's what gold looks like. I would say for today, yes. And that's on the count of what we're seeing in the dollar coming off support. And if you read the forecast that I published on Daily Effects every Friday for gold, the reaction that we got last Friday or last week in general was pretty indicative of a near-term high, which means we need to break the opening range low. We're doing that here today. This is the opening range for the week. The weekly opening range last week never broke. Okay, right here. We're testing it now. The actual stretch low is 1283. So, 1272. So we came into the 200-week moving average, the 50 line for the current operative slope off the lows. This is also the basic slope for basic trendline support. It's the same exact slope, 50 line, 200-week moving average. Extremely strong reversal reaction off that region. Okay, this is something that's very indicative of a near-term high in price. I'm looking for a drop down near 1257 near term. Okay, bullish invalidation for the broader uptrend, just lower at 1243. So it's not outside the realm of possibility. In a little channel formation or basic trendline resistance breakthrough, check it as support, move off. But the immediate focus, I think, from here, not only in the count of that we failed to hold above 16 momentum, but also this former trigger, which was a multi-touch trigger. We got a nice move here when we broke trigger support, a nice move when we broke above trigger resistance, and now that same trigger, again, looks like we're breaking it as support after failing to hold above 60. Okay, so yeah, I think near term you look lower here in gold. The broader, longer term picture mirror, I think, stays constructive. Make sense? I think the only one I didn't cover that you guys requested was pound CAD. Let's take a look at what that's doing. Hey, Miri, more than welcome. Pound CAD looks like this on the daily chart. You're coming into the initial resistance here. Now, whether you're using this pitchfork off of, I was looking at this yesterday, whether you're using off this low, which would give you some more room, or whether you use it off this low, which basically means you're there right now. For me, I'm looking for whether we close above or below that key 618 retracement of the decline. A little bit higher, you have, median line resistance for the current operative slope. Let's clean this up a little bit. Okay. All right, so the gap would need to move into, or to fill the gap would need to move in 184.95, basically call it 185, and that coincides with the 50 line. So this is going to be reserved as our near-term bullish invalidation level. So as long as we stay above this region, you want to look higher in sterling CAD. but I do think you risk a near-term pullback off this region. Here's what the 30-minute looks like. Oh, nice. Again, watch that 618 into the close. I want to try both these slopes and see if any of them yield anything. Not the strongest divergence signal because we have some areas here where we didn't make an extreme in price, right? But nonetheless, higher high, bring into a line chart. Higher high, higher high, higher high. These two highs aren't quite divergence, but you are getting that major divergence on the broader peaks. So could be a weak, I would interpret that as a weak divergence signal as you're heading to that 618. Bottom line, watch the close today. I do think you get a pullback in here. Interestingly enough, to fill the gap, that 38.2, 85.19, trendline support just lower, comes right ahead of the 85 handle. Remember, to fill the gap, we would need to go into 85. And that I think would be an interesting area for some long exposure on pound CAD if we get the move lower. But I'm looking for a near-term peak to tack on a quick retracement to see what those downside targets would be. For argument's sake, let me just see what that looks like right now. Yeah. Okay. So I like that a lot, actually, guys. If we do make a concerted high here, if we get an opening range break for the U.S. session to the downside, and this does end up being a near-term high, the reason I like it is levels map out a little bit better. So that 38.2 along that slope comes here. The key 50% along the slope that we talked about off the low comes here. So guys, feel free to take a snapshot of that chart if you want it for future reference as we get through the trading day. But these are the levels I'd be looking at here near term for pound CAD. All right. And that wraps it up for today. We got the market on the move here. Our U.S. Open is underway. So we'll be back on tomorrow morning at 8:30 for another session. Bring your questions on Brexit as we get closer to that vote. Remember, Humphrey Hawkins starts at 10 o'clock, so in just half an hour. And I will see you guys bright and early tomorrow morning. Best of luck trading, guys. Cheers.